Today I want to talk about a company called SuperMicro Computer Inc, ticker symbol SMCI. This is a company that in the last day moved down almost 20%. However, if you look at the last month, it is up over 150%. And in just the last year, this stock has moved up over 800%. In this video, I want to talk about what the company actually does, as well as take a look at their most recent earnings report, and finally discuss what the future might look like for this company. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned in the intro, SMCI is up over 800% in just the last year, and if we look at the last 5 years, it gets even more insane as this company's stock has returned almost 4,000% since 2019. And this is on the back of a very strong semiconductor market. The VanEck Semiconductor ETF has returned over 71% in just the last year. Another very popular semiconductor ETF is SOX by iShares, and it has returned over 55% in just the last year. Here we can see SPY compared to SOX and SMH, and how much more the semiconductor industry has returned versus the broader S&P 500. And when you throw SMCI on the same chart, you can't even see the returns of the semiconductor ETFs or even the S&P 500, because SMCI has ran up so much in the last year. So what exactly does SuperMicro do? SuperMicro is one of the largest producers of high performance and high efficiency servers. It also provides server management software and storage systems for various markets, including enterprise data centers, cloud computing, artificial intelligence, 5G, and edge computing. If you saw the video that I posted about a week ago on Nvidia, you know that they're experiencing a lot of growth around the data center side of their business. And with this being a large factor in SuperMicro's business as well, I would make the assumption that they are seeing large influx of purchases from data centers, and that's what's leading to the rapid growth of their revenue and EPS numbers. If you go on SuperMicro Computer's website, they're very keen on showing off their relationship with Nvidia. They even have the CEO of Nvidia pictured here, and if you scroll through some of their tabs, they discuss how compatible their products are with Nvidia's products. I've spoken about this before, but the biggest worry that I have with the semiconductor industry is how new the products are to the market and how they are building in obsolescence. Because the question mark that I need answered for me to invest in this industry comes around the fact that these products are so new. And one of the things I've always heard about if you buy like a gaming computer for say, is that lifespan for that computer is very long as opposed to a console. Consoles release every 4 to 5 years. However, a gaming computer, when you buy it, you only have to upgrade your graphics cards and GPUs maybe every 6 to 7 years. So the question marks that I have around this industry is these data centers, yes, they're being built out at very fast paces, but how long before they really need to upgrade some of these systems and invest capital back into new infrastructure? So right now, data centers are expected to grow around 10% per year through 2030. The question mark that I have is that there's a lot of anticipated growth in Southeast Asia. India's economic situation isn't very weak right now. They have a very strong economy. We're seeing a lot of manufacturers move their operations to India. However, China is going through it right now. They have a very weak economy. So the question mark around their growth is if they get out of this weak economy, will they start seeing higher growth numbers of data centers, and how quickly will that happen? So personally, I do think that China is going to get through it. Right now, they're going through deflation. However, if we see them continue to drop their interest rates, as well as maybe provide some stimulus into the economy, I think we'll start seeing their economy take off in a major way. And oftentimes that will lead to increases in tech, specifically maybe data centers, cloud computing, which will all benefit companies like Alibaba, but also companies like Nvidia and SuperMicro. And SuperMicro announced their most recent earnings on January 29th, where they came in with a top and bottom line beat, with EPS coming in at $5.59 and revenues being reported at $3.66 billion. And these are massive jumps year over year because revenue a year ago was $1.8 billion and EPS came in at $3.14. So we're talking about 100% increase year over year on their revenue number. And the company isn't expecting this to slow down anytime soon. For their third quarter, they're expecting revenue to come in anywhere from $3.7 to $4.1 billion and EPS to hit a range of $4.79 to $5.64. And if all of that wasn't good enough, SuperMicro raised their guidance for the full year from around $10.5 billion to $14.5 billion of revenue. And this super cycle that the company is going through really started back in 2021, where they were sitting around $3.5 billion of trailing 12-month revenue and have now grown that number all the way up to around $7.4 billion of trailing 12-month revenue. However, keep in mind that before this super cycle, revenues were flat for the past 3 years. And EPS really shows a similar trend, flat from 2018 through 2021. However, after 2021, their EPS numbers took off in a major way, sitting around $10 to $11 currently. And EPS numbers are expected to jump in a massive way in 2024. The average EPS estimate is sitting at $21.83, with a low of $21.42 and a high of $22.25. This is up significantly from a year prior of $11.81. And analysts have this growth slowing down slightly in 2025, with the average EPS estimate coming in at $29.23, the low estimate coming in at $21.59, and the high EPS estimate coming in at $37.97. And revenue follows a similar path. For 2024, they're expecting revenues to have doubled from around $7.12 billion to $14.49 billion. However, in 2025, they're expecting growth to slow down to just under 40% to around $20 billion of revenue. And with the increase in growth that we're seeing from this company, we are also seeing their valuation trade up in a major way. They're currently trading at a trailing PE ratio of a 62.84. However, if we look at the last 3 months or so, we can see that they really traded in a range of around 20 to 25, and before that they were trading as low as a 10 PE ratio. And what this brings me back to is the 3 years that we saw prior to 2021, where growth stayed relatively flat. They weren't seeing their revenues increase in a major way. EPS numbers were staying basically flat, and that's why the valuation was trading around a 10 PE ratio. Now with us seeing increased growth, that's commanding a higher valuation. However, the question mark about the future I go back to is what kind of growth can we expect moving into the future? Will data centers constantly have to upgrade these chips and these servers, or will they over time build out an infrastructure and just be upgrading bits and pieces each year? So when I look at SuperMicro Computer, I think it would have been great to buy this company 4 or 5 years ago. However, right now with the valuations trading where they're at and the question marks that I have about their long-term business model, I personally am not planning to buy into this stock. I think it's cool to see these run-ups, and I love hearing stories from investors that got into companies like this and the returns that they're seeing. But right now, with the valuation where it's sitting at, it's just not for me. So keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.